Let's look at the performance of AR model portfolio. So we have two portfolios, Wealth portfolio, which is a combination of mutual funds, and Wealth Plus portfolio, which is a combination of a 60% mutual funds and 40% market-linked debentures. So if you look at the Wealth Plus portfolio across 1 year, 3 years and 5 years, it is clearly outperformed Nifty, and the alpha has been about 2 to 3% across 3 years and 5 years. But most important thing which you should look at here is the risk. If you look at the risk, which is nothing but a standard deviation of Wealth Plus portfolio, is at least 30% lower than the Nifty. Which means if you look at the risk return ratio of Wealth Plus portfolio, which is much better. If you look at the 5-year performance, risk return ratio of Wealth Plus is 1 as against 0.6% of Nifty. So hence Wealth Plus portfolio is a clear-cut winner across Nifty and the Wealth portfolio. If you look at the Wealth portfolio, it has outperformed the Nifty on 3 years period, but it has slightly underperformed on Nifty as 5-year period, right? And the main reason for this is the underperformance of mutual funds in 2018 and 19. Only 2% schemes in 2018 has outperformed the Nifty, and the main reason for that was the polarization of 5 stocks. So there are 5 stocks of Nifty which contributes about 50% weight in the Nifty. They have, and the performance of those stocks have been 200% of Nifty performance, and that is the main reason why we have seen the Wealth portfolio in a 5-year horizon has little underperformance as compared to Nifty. Let's look at the performance of Wealth Plus portfolio in absolute terms. So let's say somebody had invested 25 lakh rupees in this Wealth Plus portfolio. Let's look at 5-year horizon. That 25 lakh rupees have become 44 lakh 91,000 in 5 years time, as against the 41 lakhs of Nifty. Which means Wealth Plus portfolio has created almost 20 lakh rupees wealth for this investor in 5 years time, and this is 3.5 lakhs higher than the Nifty. So this clearly proves, even in the absolute terms, this clearly proves that the Wealth Plus portfolio is a winner, right? And just to prove this point better, what we have done is we have compared this portfolio across various cycles. So what we have done is that we have looked at the investor who invested in 2019. And since then, I'm sure everyone knows that we have seen a couple of corrections in the market, right? So this example is of an investor who invested in Wealth Plus portfolio of 25 lakh rupees on 1st April 2019. And since then, look at the value of his investments across various cycles. So let's say, for example, invested on 1st April 2019 of 25 lakh rupees, 14 Jan 2020, just before the pandemic, this 25 lakh has become 27 lakh 19,000 rupees, which means it created returns of about 11.2%, at least 4% alpha over Nifty. Then came the pandemic. In March 2020, his portfolio came down to 20 lakh 27,000, right? From 27 lakh, it came to 20 lakh 27,000, which means it has given negative returns of 19.3% since his investment. But look at the market since that day. Nifty has fallen by 35% from April 2019 till this day, but his portfolio has corrected only by 19%. So during the time when market has corrected sharply, his portfolio has fallen lesser than the market. After that, if you look at the November 2020, when the market again reached pre-pandemic level, his portfolio from that level, it reached to 28 lakh 97,000. Which means when the market was again average performance since April 19 till November 2020, the performance of market was only 4.2%. But look at the performance of Wealth Plus, it has almost double digit, 9.6%. And from then it went up to October 2021 all-time high. It generated about almost 40 lakh rupees for this investor with an IRR of 20%. Again, there was a correction came in the month of March 2022, and since till that, his portfolio is now 37 lakh 91,000 with a IRR of 13.7. And in this entire journey, if you see the returns of Nifty is about 9.7, which means it clearly created 4% alpha over Nifty. And what it reiterates is that Wealth Plus portfolio is much smooth, gives you much smoother journey across all the cycles. That's one important thing which we thought we'll share with you. The second important thing is about the SIP and why SIPs are important. So what we have done here is we have seen the similar journey, what we seen in the earlier data, where one investor who started investments in April 2019, And what we observed, the behavior of typical investor is that he starts making investments into market when the markets are doing good, right? And when the market actually sees correction, that's the time the fear takes over the greed, and that's time he stops making investment in SIPs, right? So here is an example where he started investment in April 2019 with a SIP of 25,000. The Nifty level was 11,666, right? He went on investments till March 20. That's a time when the pandemic hit us and the market came down to 10,989. That's the time he actually invested in the SIPs for the last time. After that, he took a break. When we saw the market coming down to 7,600 level, he took a break. Expecting the market will further go down, he never started his SIP. When he actually saw in December 2020, the market again went back to the pre-pandemic level, he started making investments again in SIPs, right? He went on investing, continued till October 2021, when he saw his decision was right. At least better late than never, he started making investments in SIPs. After that, again in the month of March, he saw that the market corrected. Now, if you see the performance of this investor or the investment which have done by this investor since day one, since April 2019, he started making investments of 25,000, then he stopped, he again started, and now again he stopped. So what he has done is that till now he's made investments about 7 lakh rupees, 25,000 per month for so many months with a couple of gaps, right? So 7 lakh rupees which has invested, the current value of that is about 8 lakh 12,000 with a IRR of only 8.8%, not even double digit, right? So that's what has happened with this investor who has started making investment. The market is good. He took a pause when the market corrected, and so on and so forth. Now look at another investor who's a disciplined investor, right? He has never looked at the market and he went on investments since April 2019 and till today he's making investments. Look at his total investments. His total investments is about 9,75,000 rupees in the market since April 2019, right? The value of that is about 11,84,000 rupees today with a IRR of 12.2%. Now, why he got the benefit? Because he got a benefit of rupee cost averaging. That's the benefit of SIP, right? What is rupee cost averaging? Basically, when you make investments, when the market is down, you get more number of units. When the market is up, the units which you have bought when the market was down, that value of that goes up. So you get benefit on the both the times, right? So he never tried to time the market. The earlier investor wanted to time the market even for the SIPs, right? And that's why this investor, a disciplined investor, could create 3.5% alpha over the investor who actually wanted to time the market. So what is important here is that having SIPs, it's not that having only lump sum investments, but having SIP is also important, and having a disciplined approach is also important, which we're trying to prove it here. So if you're a investor who's not subscribed for the Well Plus portfolio, or if you don't have a SIP, or if you have started SIP but never increased since you started, contact the Airwell partner. They'll help you out to upgrade your portfolio to Well Plus and start the SIP.